Investors are paying attention this week as a slew of big tech companies are set to report earnings. Let's bring in Investopedia's Editor-In-Chief, Caleb Silver, into this conversation now for the big tech roundup. Caleb, good to see you. Look, 2 of the 5 FANG stocks and Microsoft are some of the most shorted stocks in the S&P 500 over the past couple of months. Do you think that's going to continue?
Of course, as Jimmy Cliff would say, the harder they come, the harder they fall. They're the most shorted and they're the most widely held. All those stocks together are some 22% of the S&P 500. That's a lot of concentration, but when you have that much concentration, you're going to have a lot of people hedging the other way or trying to time the downturn for some of these stocks. They were right last week, but look, these are the companies leading the market, leading the economy today. So short at your own risk, they've gone nothing but basically up this year.
Caleb, you know, when you look back over the past several years or even decades with some of these stocks, they're always expensive. And you're always like, oh, hitting yourself on the head, like I didn't buy it. I mean, Amazon's always had a crazy PE, sometimes doesn't even have a PE, but sometimes other stocks look expensive that turn out to be dogs. How do you discern here?
Well, you and I would have said in 1999 when Jeff Bezos said, we don't worry about profits, we're just building a great customer experience, that there was no way it was going to work. All they've done is just grow into the biggest company in the world. So, you know, you never know. At the same time, Jeff Bezos did tell us last quarter they're going to plow all their profits, some $4 billion this quarter, into taking care of their company. So they're set for the coronavirus and they can handle it. They don't need to make a profit. They are the economy. They are e-commerce. So some of these companies are so dominant right now, there's no way that they're going to be, you know, tripped up by this quarter or even next quarter. They are the companies that are the leaders in our economy and in the stock market.
Andy, do you think one byproduct of the tech hearing this week, and it will take some time, surely, but Facebook will be turned into a series of baby books?
Yeah, I love that expression and that little possibility, you know, little, not so little. People have been talking about that for a while as a remedy for what ails Facebook in terms of its stifling competition and also in terms of it offering sort of only one layer and level of protection for consumers. The thinking is that they're different baby books, which would be Messenger, WhatsApp, Facebook, and Instagram, those 4 platforms. They would compete and offer different levels of service that would offer consumers choices, and they would compete on who was the safer or better platform for consumers. We don't know. Of course, Zuck has been pushing back against that. I'd love it if some CEO someday ever said, you know, it'd be great. They should break up my company. I mean, it actually has worked in a lot of different cases.
Do you think, Caleb, it would work in the case of Facebook? Can you see a broken up Facebook, you know, becoming maybe, you know, in different pieces stronger than it is as a whole?
You couldn't argue with it. Look at the size of some of these apps. Instagram is massive. It's got its own unique audience. Facebook is massively massive. It's got audiences around the world, and then Messenger, of course, and whatever else they're bringing together. You could say the same thing about Amazon. Carve out Amazon Web Services. It's one of the biggest companies in the world. If you do that, it takes some of the profit margin and the profits away from Amazon. But yeah, you could break up Facebook. It could be more valuable. You could break them all up and probably find value in different places. But right now, it doesn't look like regulators have the teeth to do that. The European regulators seem to be the ones with the teeth in the fight, but they weren't even able to get Apple to pay up in Ireland. So it's hard to say if that's ever going to be forced upon them because we haven't seen it yet.
Caleb, we talk a lot on the show about the fear of missing out, this herd mentality that sort of takes over amongst investors. What about folks who, I can't imagine somebody invested in the market who doesn't have some exposure to these FANGs, especially if they just hold indexed funds or, you know, mutual funds. But for those who maybe do hold some and go, you know what, I want to get in a little more. What do you say at these levels? Have they just missed the boat at this point?
I mean, you could say that. You could have said that over the last decade and been wrong every single year. So, you know, you can't time it. You could dollar cost average your way in. The dollar amount's very high right now, but you wouldn't have been wrong in the past 10 years. And it's hard to say you'll be wrong going forward. Yes, they're big. Yes, they have massive market caps and the forward PE ratios are off the chart. But that's what happens when you are the biggest, most dominant companies in the world. It's hard to say what is the right level for that. Dollar cost average your way in. If you feel like it's too hot, set those those limit orders and say there's a price too high that I won't pay. But you would have been wrong going up until today.
You know what's interesting, Andy? One FANG that's left out here is Netflix. Does Reed Hastings deserve to be called down to DC?
No. I mean, it's a much smaller business. It's really not even a platform, or it is a platform, but it's not an ecosystem. The other four are ecosystems. I mean, it is the smallest of the FANGs in terms of its scope, right, Brian? I mean, it's just a streaming company. I mean, the other ones have much grander ambitions and designs and actual footprints right now. I mean, Reed Hastings may have greater ambitions, but everyone was saying, oh, 5 years ago, he's going to step up and do sports streaming. Lucky for him, he didn't do that. But I think that's right. I mean, the other company, I thought you were going to mention Microsoft, because Microsoft is not here, but its market cap is huge along with the other names. But the reason they're not there is because they don't have a dominant position that could be considered monopolistic anymore. Of course, they famously did in the days of Wintel when they dominated the PC business. But look what happened to that business. It just basically dissipated. Their control of the browser business went away with Chrome. And so, they've got a nice business in cloud services with Azure. They've got a good gaming platform. They still do have a very strong PC business. They have a good business with LinkedIn, and it's got a huge market cap, but they're not going to be called down. Satya Nadella, you got to pass. Reed Hastings, Netflix, you got to pass too.
Caleb, do you agree with that? Should Satya Nadella and Reed Hastings sit out this latest testimony before lawmakers?
Absolutely. And I don't think anybody wants to mess with Netflix right now, since it's such a comfort stock and a comfort company for most of us. It has been hitting all-time highs over the past couple of months. And Andy said it best. Microsoft used to be in the crosshairs of regulators, but not anymore. It's got all these various businesses contributing a lot to its bottom line. I don't think they're the same type of thing. They're not advertising delivery mechanisms, at least not yet for Netflix. They're not advertising delivery mechanisms in the way that Facebook and Google are. That's their business, and what they bring to us, the medium is the message as far as regulators are concerned.